Today, folks, we're diving down into the pivotal decisions I made at the beginning of this year that literally saved me tens of thousands of dollars, and why that could be setting up as a mistake going into 2023, especially if you have a smaller portfolio and you're looking to scale. There's opportunities of a lifetime presenting themselves right now as we do a year-end review of my $394,000 dividend stock portfolio. If this is a conversation that you would appreciate, damn it, in return, just hit that like button, folks, because the fear and greed index right now continues to kind of be off the Richter scale. I'd argue that, this is a little inaccurate, because I think we'd be at extreme fear right now, whether it's real estate, stocks, everybody from the hills, your billionaire figureheads, your CNBCs, your Jim Cramers, everybody has been so damn fearful, which at this point, I think the pendulum is starting to overswing to the opposite direction, to the point where you kind of get that Warren Buffett quote. When he says that sometimes it's good to pay a fair price for a good company rather than paying a great price for a shitty company. I think that's the opportunity that's really starting to present itself here, folks. But before we start talking about those great companies, I think we should go back to kind of the beginning of this year, right around March, the end of Q1 into Q2, where I made this pivotal decision to sell off all of my individual stocks, and I started fixating on primarily 3 ETFs, because there was only really 2 directions to go in for me, which is either you're going to be very selective with the stocks that you're picking and very cautious because you don't know what you don't know. And I got devastated on what I thought were great companies like Algonquin Power and Utility Corp, some of these incredible stocks that you just didn't realize were mismanaging debt and got wrecked in a higher interest rated environment. Or you could have went in the other direction, which is what I decided, which was letting ETFs, passive, broad-based ETFs, dictate the best companies, so the ones that didn't do so well get weaned out automatically, and you're not really stuck managing them, so the best will surface to the top heading into a recessionary environment. And damn, when you were listening to the likes of Meet Kevin, Financial Education, all of these figurehead billionaires like Kevin O'Leary pushing these horrible investments onto you, what did I say? What did I show you here, guys? A decision that was very hard for me to come to a conclusion on, but I did, and I've continued to cost average into these 3, and they've literally saved me tens of thousands of dollars. We're talking about the Dow Jones Dividend ETF, which is SCHD, guys. I've got about 20% of my portfolio currently there. VOO, 33.8%. I've been really cost averaging in the S&P 500, and of course VDY, my Canadian high dividend yield ETF. We're going to look at the performance of each of these in a second, and then talk about future potential here, because firstly, many of you know that, at this point, I have sold off some of my REITs. I'm going to talk about that in a later video, because I'm still looking at building a REIT portfolio, but I am using that capital because I'm going to max out my tax advantaged accounts. I've been just kind of tax loss harvesting a little bit, doing some of that, and I just wanted to get cash ready, so I've got about $37,000. I'm not going to be deploying all of that, obviously, but at the beginning of the year, we're going to max the TFSA. We're going to start prepping for RRSP maxing, and taking a look, guys, the entire portfolio today is around $357,000 invested, 37,000 cash. It's around $394K. I'm down, since I've been cost averaging and doing these pivotal decisions, about 2.4% or $8,900. Really not that bad. Now, obviously, the goal was to get over $1,000 a month in dividend income. Right now, I've kind of reduced it back down to about $10,479 since I sold off those REITs and started doing some changes to the portfolio, but I'm not trying to fixate as much on dividend income as I want stability, a combination of growth and income, because a lot of people would be chasing 5-6% yields in this market, but I'm really happy with just 3% average yield, because I know I can spend it whenever I damn well please and know I'm not hindering the growth of the overall portfolio. But this month, one of the best months this entire year, guys, take a look at this little bar down for December. I made over $1,800 in passive dividends, just primarily off ETF checks. Literally mind-blowing stuff. Beautiful. I mean, damn, that's like, half your monthly expenses covered right there, depending on where you live, of course. Now, if you guys enjoyed this portfolio overview, you want to support the channel, I put a lot of work into building these portfolio tracking spreadsheets so you can bring all of your accounts into one place to get a better understanding of your diversification. I'll leave the link in the description below. It's the website's portfoliospreadsheet.com. You can use coupon code DIVIDENDS. You get 30% off. You'll get all the patches and updates when we get them done, along with the portfolio tracker we're trying to launch on Excel. You buy one, you get them all for free. Now, do keep in mind, in the new year, I'm going to be launching a WhatsApp and Discord group, which you'll have to subscribe to hear about, and we're going to be doing a live stream on New Year's tomorrow, recapping the insanity of this year. There's so much that happened, so consider hitting that subscribe button and that bell notification, because I'm not sure sure what time we're going live tomorrow, but it's going to be one hell of a fun live stream. But let's kind of do a comparable here. Let's take a look at these ETFs and talk about the mistake that could be setting up for me going into 2023, and especially if you're looking to build a portfolio, and why I think it's about time to pivot. But you'll remember, guys, I really made this pivotal decision coming into March where I really started loading up on the S&P 500 index, which currently is only down 20.43%. I say only down 20.43% because when we compare it to some of the top 10 holdings, you'd be happy to be down only 20%. But there's SCHD, guys. This Dow Jones Dividend ETF is such a miraculous investment that proved to be a recession-proof one for me. Only down 6.84%. You tap on the 3% yield, you're only down 3%, guys. And you take a look at the 5-year performance, and right now it is actually out-sustaining and outpacing the S&P 500, which is kind of mind-boggling to me. So I really, really love this ETF. I made a pivotal decision by actually selling only about a month or two ago. I sold pretty much all of my VYM position, which I think is very comparable to SCHD. It just doesn't have the same long-term performance. So I decided to double down, sold VYM, which performed very well this year as well, and doubled it all down into SCHD. Now I also own another very recession-proof ETF, which is VDY, my Canadian dividend yield ETF. Taking a look year to date, down 5.45%. But again, tack on that 4% yield, that juicy 4% yield, and this has been the best performer of all the ETFs that I bought this entire year. But taking a look, 5-year performance, not nearly as stellar as these other ETFs. I'm just using this as a monthly income ETF. But let's talk about some of the individual stocks here and why, if you're looking to build a portfolio, guys, that buying ETFs, though I think they should be a proponent of everyone's portfolio at this point, but you really need to, especially if you have a smaller portfolio, especially if you're younger. I mentioned, if you're like 20 years old, guys, the valuations in the market don't really matter because you have a decade before you're my age and to have those values catch up. And the only thing you need to be doing is buying pretty much everything across the board. And when we take a look, guys, could you imagine going in on a Boxing Day sale and seeing products off from 50 to 80%? That is what's happening right now, and people are acting like I can't be touching this, I can't be buying this, and these are literally the most world-renowned companies on the planet. Damn it, as Buffett says, guys, sometimes it's better to pay a fair value than to buy a great value company that's just crap, because Meta right now trades for a PE of 11. I sold this thing out around 200 to 220 a share, which you got to remember, I was buying this through the pandemic lows. I've been holding on to this forever. I didn't really lose money on it, but now, guys, now is not the time to be like, oh, I can't be buying these kind of stocks, because if you're not doing your due diligence and research and just trying to pick a handful of these, if you're looking to build, exponential wealth, get ahead in this environment the same way I did through this channel over the last 4-year bull market, I mean, you're not going to get anywhere unless you're making a lot of money at your job, guys, which I'm not somebody that makes crazy money at my job. I had to really rely on the markets to give me that exponential boost. So let's just take a look, because you can put little bits of money in these at this point, guys, and it could go a very long way over the next 3 to 5 years. Take a look at Shopify, for example. This thing's down 70% year to date, and it's been really bottoming. Most of these stocks seem to be bottoming through November here. October to December, they've all looked like they've leveled out. Some of them have experienced these extreme declines earlier in the market. The more speculative the stock was, I've noticed, the further the drop's been and the earlier the drop's been, and everything that's just been holding on, your Teslas, those kind of stocks, they're the ones that are finally getting hit, which I think are the final bell to ring in this collapsing market, which would be your Apple, your Teslas, these golden childs of the last little bull run we've experienced, or the mega bull run we've experienced here, right? And Tesla, the only way you can look at this, guys, if you think it's a car company, don't buy it. It's overvalued. It's like 7 times overvalued compared to the auto industry. But if you think it's a tech company, then it's probably extremely cheap because it's trading for half the value of Nvidia and Amazon, which is kind of staggering to think about, right? But look at that. Do I think Tesla's bottomed here? I don't really know. I'd like to think it's going to end up around the $100 range, but I'm not going to gamble on that. But oh man, it's just crazy to see how far the stock has fallen. You take a look at things like Apple here, guys. Apple's now down 29.26%. Apple was actually outperforming the S&P for most of this year, and now it's just getting devastated with the rest of the market. 30% discount this year. Crazy. PE still reasonably at 21.06. You're taking a look at things like Microsoft. Microsoft is currently down 28%, following in line, always trading kind of equally with Apple, even though for some reason Microsoft has a much higher valuation on it. And then we got Amazon here as well, guys, down 51 damn percent. Google here, for crying out loud. Google is down 40 freaking percent. Yes, we're going to go into a period, guys, where revenue growth is going to kind of suck up a little bit. Everyone's butts are going to pucker up a little bit with fear. So they're not going to spend as much on marketing dollars, damn it. But this is going to come to an end. inevitably this is going to come to an end and people are going to start spending money again. Yes, a lot of people are going to get devastated through this. Yes, some people aren't going to be able to afford their damn variable rate mortgages, but that is what's setting up for this opportunity of a lifetime. People had no problem buying the tops of the crypto market, but they sure as hell don't want to buy the bottoms, and I don't even want to talk about crypto in this video because we're going to talk about it on the live stream tomorrow. So consider subscribing, hitting that bell notification, and I got to pass that question off to you folks. What do you think about this? How has your portfolio been performing? Have you made any pivotal decisions this year? I'd love to hear about all of it.